Well, thank you guys for tuning in, SoFi investors. I hope you guys had a great weekend, but you are ready for a very red tomorrow. Yes, you are seeing the Russian stock exchange down about 17% currently. The German exchange down almost 4%. The France exchange down 3.3%. You're also seeing the Italian markets down 3%. The Euro stocks 50 down 3.63%, and like I said, Russian markets down 17%. That is going to translate into a very red markets for us tomorrow. And what does that mean? Shorts get the green light to short SoFi yet again. But what is the silver lining here? Quite simply, you get to buy stock for substantially under SoFi's fundamental valuation. So let's get into all this information, what is going on in the world, geopolitical tensions, the short interest of SoFi, what to expect, the economic data that is coming out this week, what I'm going to be doing with my SoFi position, all of that and much more. So stay tuned, hit the like button and subscribe to the channel, and make sure to comment down below. What do you guys think about earnings coming up on March 1st? You'll get my take on that as well here in this video. So CNN, the latest on the Ukraine-Russia crisis. Everybody is condemning Vladimir Putin for acknowledging the eastern sections of Ukraine as their own bodies, their own government bodies. And Biden plans to impose new restrictions on trade and financing in the two pro-Moscow territories. So basically what Putin did is said, hey, you guys are your own country, so now we can come and support you and invade Ukraine without invading Ukraine. So obviously the global community is not supporting this, and it would technically still be an invasion. So do expect some sanctions to be coming if America does indeed still have a backbone. I don't know if we do, if we're going to sanction them. Sanctioning these two pro-Moscow territories really isn't going to do much because they're very small and have a very low population, and we do virtually no business with them. So we'll see if we have a backbone. We'll see what actually does happen. But it says Biden set to order sanctions on separatist regions of Ukraine after Putin decree, EU vows additional measures. So we're going to have to see if anybody is actually going to stand up to Putin, but it does not look like it at the current moment. Now let's get into the economic data that is coming out this week that is going to move the markets. So on Wednesday, anything that is red or in dark or black is going to have some level of significance to the global community as well as our markets. So you have the CPI, the flash for February for the European Union, the inflation rate year over year at 5 a.m. as well. For America, highlighted in red right here, ADP employment change for February. And for Canada, this could also be very important at 10 a.m. on Thursday. You do have the Bank of America interest rate decision. Is that there? No, that's Wednesday. I'm stupid. And then you do have a lot of gas, excess and exchange rates that are coming out, so that's going to be important. Fed beige book, that's at 2 p.m. on Wednesday as well. And then on Thursday you have consumer confidence for Japan, which is going to be very interesting. That is highlighted in red right there. And then you do have challenger job cuts for February at 7:30 a.m. Unit labor cost quarter over quarter at 8:30. Initial jobless claims at 8:30. Non-farm productivity Q quarter over quarter, that's also at 8:30. So on Thursday you get a lot of data that is coming out. Continuing jobless claims as well, 4-week average at 8:30. Market services PMI, this is what the Fed does pay attention to, these three right here, at 9:45 a.m. and 10 a.m. as well. ISM non-manufacturing PMI. And all of this data is going to move the markets. Why is that? Because it's going to move the Fed's expectations for raising rates or keeping rates low for longer. If this data comes in super hot, then you're going to see the Fed have a lot more pressure to act more aggressively to raise rates and to fight inflation. So that's why all of that is very important, but that is later in the week. So what is going to happen tomorrow? You're going to see the markets gapping down. You're going to see things hitting the fan. You're going to see a lot of blood on Wall Street. You're going to see our favorite stocks get beaten into the ground because, like I said, that's a green light to short SoFi or any other stock you're invested in. Basically a green light. So that's what is going to happen, but we will shortly recover after that, as long as the situation does not continue to develop, because markets, they get over fear catalyst very, very fast. And the big catalyst, the holy grail, is going to be the Fed the 16th and the meetings following after that. So that is very important. And as we do know, SoFi stock has a large institutional long backing, right? Backing with about 53% of all SoFi stock being held by institutional investors, as well as a very positive option order flow on any given day. Over the past week, 85% positive order value, 54 institutional orders, totaling $19.22 million. Yesterday, or on Friday, it comes up yesterday over on Ortex, you did have 11 orders totaling $1.2 million, positive order value of 87%. These are numbers you do not see on any other stock. Pull up any other stock and you're not seeing those kind of positive numbers. So institutions are, very bullish on SoFi, but this environment is not very kind to unprofitable companies. And you can even see this reflected down here. The short interest of SoFi was 1.94% back in July of 2021, and it has went up consistently since then. So that is helping to keep SoFi stock down, and that is why we have basically plummeted from $25 per share down to $10 at the lowest. It's because of the short sellers, and the short interest of free float is currently at 18.74%. Ortex estimates for the shorted shares is at 115.84 million. Cost to borrow numbers are not there. The utilization is 97.25%. And the days to cover is at 2.74. So that is looking good as far as a short squeeze is concerned, but that is helping to keep SoFi stock down in the dirt. What is the silver lining here? Well, we get a chance to buy SoFi significantly under its fundamental valuation, especially considering the growth rates that SoFi has. Eventually, it's going to be rewarded for that. You'll never see in history a business that is doing better and better and better and better, and the price of the stock goes down and down and down for a very long time. If you're thinking in a 6-month or a year time frame, eventually it will correct and you will go closer to that fundamental valuation. It's going to take a little bit of time though. Now, as far as our futures, the Nasdaq 100 is indicating it's going to open down about 1.9%, S&P down 1.25%, and the Dow Jones down about 1%. So it's going to get very bloody, and by the time the futures really start to crank here in about the next hour or so, you're going to see a dramatic reaction, and you're going to see a very down market. Do not be fooled. The reason I am even making this video is so you guys don't panic, so you know exactly what to expect, and you know this is going to be a very short-lived fear catalyst. As far as SoFi is concerned, the actual charts, it would not surprise me to drop down to about $10 per share. Would not be out of the question. But heading into earnings on March 1st, I think SoFi is going to provide a lot of good guidance and is going to even possibly say that they could post a profit by the end of 2022. If they do that, expect the stock to rally above $14 per share. But the key levels we have to break out above in the meantime is going to be the Bollinger Bands, this 20-day simple moving average, which is this blue line right here I have my cursor on. That's at $12.26 per share, so we have to break out above that. The MACD is bullish, but it's starting to curl to the bearish side, but ultimately we have to break out above the 50-day moving average. Let me take the Bollinger Bands off, and that's at $13.59 per share and then $14 per share. Those are the most important levels, and we'll just have to wait and see if we can break out above those. I would welcome the stock going under $10 per share, because why? I would get to acquire many more shares of SoFi for an insane valuation, for an insane cheap valuation for the long term. I will welcome that any day, and I hope you guys will as well. So like the video, subscribe to the channel to stay up to date with everything you guys need to know, geopolitical tensions, anything that's going to affect the markets or, make you money. So subscribe to the channel, as well as that. Comment down below, what do you guys think for earnings? What is your price target after earnings? Thank you guys for watching, and I will see you in the next one.